tells you that although the institutional as well as the just regular traders are hedging their bets, keeping part of their positions in gold. In fact, I think Goldman Sachs is continuing to recommend that their traders continue to be fairly aggressive in allocating in gold. Central bank buying in gold is in an accumulation stage. That continues. So you have the hedging of safety, and at the same time, you've got a very strong equity market.
Yeah.
That put together is what I would look to see throughout the summer. And I think that gold has the opportunity to at least hold pretty solid at these levels. Break, we're going to look at 3,200, a significant move, 3,440 to the upside.
Gold prices extended their losses during the North American session on Wednesday, following a brief rally earlier in the day that saw the metal touch a high of $3,325. By the time of writing, XAU-USD had dipped below the $3,300 mark, reflecting a 0.27% decline as market participants reacted to the latest Federal Reserve policy minutes. According to Gary Wagner, editor of thegoldforecast.com, the future direction of gold will largely hinge on whether the $3,300 level can hold as support, the progress of global trade negotiations, and upcoming inflation data, which will shape the Federal Reserve's next monetary decision. On Wednesday, gold prices fluctuated on both sides of unchanged territory and were registering slight losses just before midday, as traders awaited the release of the Federal Open Market Committee meeting minutes. The tone of the minutes, particularly if it leans more dovish than expected, could serve as a catalyst for renewed upside momentum in gold. Despite recent consolidation, the bullish case for gold remains supported by ongoing geopolitical risks. Heightened tensions between Russia and Ukraine, as well as the persistent conflict in the Middle East involving Israel and Hamas, continue to underpin safe haven demand. However, a temporary pause in the rally is evident, partly due to a rebound in U.S. Treasury yields, which has lent strength to the U.S. dollar and pressured bullion prices. Wagner highlights the sharp drop in the U.S. dollar index, from 109 in January to a recent low of 98, as a key factor that previously fueled gold's rise. The metal is currently trading within a narrowing range, bounded by strong support around $3,175 to $3,200 and resistance near $3,300. This compression signals that gold is awaiting a macroeconomic trigger for its next decisive move. Meanwhile, Goldman Sachs analysts have reiterated their positive long-term outlook on gold, recommending a higher-than-normal allocation to the metal in diversified portfolios. They point to mounting risks to U.S. institutional credibility, ongoing pressure on the Federal Reserve, and steady central bank buying as reasons to remain bullish on bullion over the longer term. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Well, we'll take a look at a chart. It is basically a daily chart of gold futures. This right now represents the June contract month. And you can see that I've really put in a couple of studies, a Fibonacci retracement long-term data set from 2617 up to the record high, and then another data set starting from the lows back at the beginning of April at 2967 up to the highs. And we get what we call confluence. Confluence in a Fibonacci retracement data set is where you're using two different variable time bands and you get a price point that comes in at a significant Fibonacci number. So for example, the lows that came in the middle of May at around $3,166 were both a 61.8% retracement from this short-term data set and a 38.2% retracement from this much longer-term data set. Now, we did see gold move back up, and right now we are really at a key level, which is right around 3,300. And you can see that there's two different data sets saying that this is significant. The 23.6% and the 38.2% are both alluding to 3,300, providing strong technical support. So when you look at that and the fact that we're above this purple line, which is the simple moving average, it's a 20-day. And then we look at the stochastic oscillator to really give us an indication whether gold is oversold or overbought. It is not oversold at this point with the percent K and percent Ds at around 50. We would look for a potential top once or if they move to about 80. The one thing that we can say is that gold has become range bound rather than strong trends either up or down. If
Right.
you consider that since pretty much December of last year, we've seen gold go straight up with two very, very subtle corrections. The first one, April 7th, the second one more recently, May 14th. And in both occasions, these corrections were not deep by any means. What I believe we're seeing is we are seeing continued central bank buying.
Okay.
We are seeing good consumer demand. And right now, the weakness that we've seen recently has been where the current administration's negotiation in terms of trade agreements with different countries are kind of coming through. So, depending on how much headway the negotiations of trade deals picks up or drops off, that's really what we're looking at. And the other thing that is going to be important is going to be at the end of the week, which is the most current PCE. And
Yeah.
that, of course, is the preferred inflation measure of the Federal Reserve. And that will help guide them in their next monetary decision. If the dollar finds support at the current recent lows that came in, very, very recently at around 98.73 on the dollar index, the next level of resistance comes in at 100.75 and then again at 102.492. A move to either the low area above 100 would not be that significant. That could be met with consumer demand. In other words, dollar strength, if there's buying in the market at the same time, kind of cancels each other out. A strong move to about 102 would decrease the value because it's paired against the dollar by about 3%, and that would be much more significant. The key is, you correctly pointed out, the dollar has absolutely been in a free fall from January 2025, when it was sitting at 109 down to 98. That's 11% drop in the dollar itself.
Yeah.
And that was one of the most significant components of the recent move higher in gold. Well, it can never completely decouple because it's paired against it. At the same time, when you've got the investment community being strong sellers or strong buyers, if they're strong sellers and the dollar is moving up, it's going to magnify the intensity of the sell-off. In the same time, when we've seen this incredible dollar weakness coupled with buying by retail and institutional traders, that certainly is what took gold from relatively low levels in the middle of April. And the one thing that we can see, I pulled up a different chart. It's still representing June futures. The one thing on the bearish side is that we can see these recent tops in the market. We've had a series of two lower tops or lower highs. That does say that we are seeing this range compress. And at the same time, we have to acknowledge strong support at approximately $3,175. That is the 61.8% retracement of the small data set. So we have a compressing range. We have seen a series of lower highs, but we have strong support at about 3,200 and a little bit below. The question now is whether 3,300 will hold. And as I said, the key to that is going to be the news that comes out about the trade negotiations by the administration. If they continue to alleviate the fear of trade wars, global trade wars, that cannot be bullish for gold. If they stall in a certain way or slow down, then we could see the momentum pick up. And the other thing that we're going to want to watch very closely is inflation, because as the minutes showed that were released today, the Fed is very concerned about a uptick in inflation. And if we get another reading that shows that inflation is continuing to grow, that is going to affect the Federal Reserve's next monetary decision.
According to Gary Wagner, if bullish momentum returns to the gold market, prices could push toward the $3,440 level, an essential technical target that would mark a significant upside breakout. For now, gold remains in a phase of consolidation, navigating a complex environment marked by robust equity market performance, persistent geopolitical risks, and ongoing concerns about inflation. This has led to a cautious yet supportive tone in the market, as traders seek to strike a balance between risk and safety across their portfolios. Over the past 3 years, gold has experienced a remarkable surge, with consistent price increases nearly every quarter. This sustained rally has placed gold firmly in the global financial spotlight. Reflecting this sentiment, Bank of America has issued a new bullish price forecast, reinforcing the long-term value proposition of the precious metal. The bank suggests that current price levels, around $3,300, could still offer an attractive entry point for investors. In their view, the market is undergoing a healthy correction, one that may continue over the coming months. However, they remain confident in gold's long-term trajectory. We got there, and we feel the market's going through a correction right now that could last a few months. We're still bullish longer term. We think that in the longer term, possibly into the second half of 2026, we'll breach $4,000 per ounce. We expect it to happen into year-end, into 2026, stated a Bank of America analyst, expressing optimism that gold will reach new all-time highs in the next 12 to 18 months. Let's get back to the interview.
We have to acknowledge that although the market has come down a bit, it is still in a fully bullish momentum and demeanor. And what I am really looking at is this 50-day moving average, because traders look at prices above the 50-day moving average as being in a short-term bullish trend. Below it is bearish, of course. So we are above that. We did come down and form a bottom at around 3160, but bounced right off of that. And the one interesting thing is that when you think about what happened on Friday, where the market was up, $50, $60, and then yesterday it took it all back. We got that whipsaw, and that whipsaw has just been over the last 2 days because we had the 3-day holiday weekend, and now we've got kind of a wait and see attitude. You can see not very much movement today whatsoever in terms of range itself. The high 33.24, the low 32.86. So not a tremendous range in the market. It is still, technically speaking, solidly bullish. And if that's the case, to answer your question of where are our next levels of resistance, we are currently seeing resistance being the high that came in around 31.50. Above that, we're starting to look at the all-time record highs and some of the closes. The all-time record high, 34.40, 34.41, achieved on May the 6th, is the number you want to see on a closing basis. Of course, above that is this one, what we call a wick, meaning on an intraday basis, we saw gold break 3,500, but it's never closed in that area. So that's not significant until we see gold break back above 34.40. Well, we are absolutely into summer trading now. That just really began.
Yeah.
But as you correctly pointed out, you've got the equities markets on fire. You've got still the safe havens such as gold, relatively strong. And so that tells you that although the institutional as well as the just regular traders are hedging their bets, keeping a part of their positions in gold. In fact, I think Goldman Sachs is continuing to recommend that their traders continue to be fairly aggressive in allocating in gold. Central bank buying in gold is in an accumulation stage. That continues. So you have the hedging of safety, and at the same time, you've got a very strong equity market.
Yeah.
That put together is what I would look to see throughout the summer. And I think that gold has the opportunity to at least hold pretty solid at these levels. Break, we're going to look at 3,200. It is really reacting to uncertainty.
Yeah.
And that uncertainty is diminishing because there were great unknowns when the tariffs were first implemented by the administration as to what the fallout could be. Because if it all went the wrong way, we could be facing really dramatic inflation, diminishing returns in equities, and a GDP that was contracting. And the fact is, we haven't seen that. The fact is that the trade negotiations actually seem to be working out in a positive light. meaning that the United States has set itself up to get a better deal in terms of reciprocal tariffs country to country. And so that uncertainty factor that was driving gold tremendously higher seems to be diminishing. And that's where we saw the weakness come in.
Yeah.
And the key, the linchpin, is going to be on how the trade negotiations develop on an ongoing basis. Because in terms of geopolitical conflicts, which is the other thing that gold is very sensitive to, the major hotspots are still hotspots. They're still in the news cycle, but they don't seem to be dramatically affecting the price of gold. Higher inflation would cause the Fed to possibly consider reacting. And the only real strong tool that the Federal Reserve has to combat high inflation.
Gold remains in a holding pattern, reflecting the tug-of-war between strong macroeconomic signals and persistent global uncertainties. While recent price pullbacks have tempered short-term enthusiasm, the broader market outlook remains favorable for the metal's long-term relevance, particularly as global confidence in monetary policy and institutional credibility is being tested. Market watchers are closely monitoring technical thresholds and geopolitical currents, waiting for a definitive spark that could reignite bullish momentum. While shifting narratives and fluctuating yields, gold's strategic importance in diversified portfolios remains largely unignorable. With sentiment split between short-term caution and long-term optimism, could the next wave of inflation data or global policy shifts become the spark that propels gold into a new growth phase? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.